Welcome to VidZet, your home for careful consideration of our common concerns. I'm Dr. Ted Noel. I am speaking just straight from the heart about a subject that Donald Trump has got absolutely, totally wrong. And this is something called a balance of trades deficit. Now, in theory, the way this works is China builds an iPhone, they sell it to us, and they sell it for coin. So ultimately, we get the iPhone, they get the money. And so the money going there without anything going back, without them buying stuff from us to send the money back, that's called a balance of trades deficit. Well, it's a number which has no meaning. All kinds of economists get wound up in it, but the fact is it has no meaning. You see, the money that China gets is an economic good. The iPhone that I bought is an economic good. I exchange one economic good for another one. In other words, it's a free trade and there's nothing else there. The key is I want this more than I wanted this, and so I got what I wanted. China got what it wanted. And so what? If they got hundreds of billions of dollars more of these than of these, we got these. And the bottom line is it makes no difference whatever. The problem we have is somehow somebody thinks that because we're not making enough stuff that we're selling to them, that we've got a problem with our economy. And that's complete and utter nonsense. What it says is China wanted more coin and we wanted more stuff. And so we both got what we wanted, and China having more coin is going to have to do something with it. We don't know what they want to do with it. Doesn't really matter to us, but it happens also for the European Union and for Canada and for Mexico and a whole host of other places. The key is they want the coin. And the fact is that they are using it as a reserve currency. So if Koreans have our coin, they can buy something from Japan with our coin. And the Japanese can buy something from Germany with our coin. They use it over there. And guess what? By a lot of our coin leaving and going offshore, it reduces the amount of coin here. And that is a reduction in something all of us are familiar with called inflation. The bottom line is it's absolutely meaningless in terms of whether we're sending money over or not. That's free trade. Now, there's a second item out there that he talks about. He's using tariffs as a way of trying to wipe out this issue of us getting more stuff and not them. But look at what's going on. The people who went overseas to manufacture to send to us went over there because it was cheaper to do. Now, granted, if Europe charges 25% on a car going that way and we charge 3%, that's not fair. They should charge 3, we should charge 3. 3 covers the cost of the ports and the police in there and that kind of stuff. And that's just a cost that's natural. But if we're worried about them charging more money, think about what's going on. We're getting the cars cheaper from them. That's a good deal. I get my stuff cheaper. What's not to like? Well, there aren't that many people making cars. Oh, what about General Motors and Ford and Tesla and Volkswagen and Mercedes and BMW? Oh, wait, Volkswagen, Mercedes, and BMW are foreign companies, aren't they? No. They start out in Germany, but they build their cars in the United States now. They're American manufacturers. So what's going on here? Is it fair that they don't have the lower tariffs? No, that's not fair, but that's a different question. Balance of trade has nothing to do with it. But remember that when the tariffs are raised, let's say we raise the the tariff on, let's say, Nestle's chocolate, for example. Nestle is a Swiss company. We raise the tariffs. The chocolate bar is here. Oh, guess what? There's another price on that. Who pays that extra coin? You and I do. Nestle doesn't pay it. And that brings me to another point. Companies don't pay taxes. We made a whole lot of improvement by lowering our corporate tax rate because they were able to bring money back and to pay more money to workers. But the fact is, they don't pay taxes. If there is a tax on a product, and we sit here and look and say, okay, we're putting tax on that. Okay, here's the product. Here's the tax on it. Who paid that money on the tax? I did. Company didn't pay it. Company may write a check to the feds that includes the money I paid in taxes, but the fact is the company is acting as a tax collector. So the proper corporate tax rate is 0. Big, fat goose egg, 0. Now, let's go on. Let's continue with the tariffs. Tariffs are a cost on you and me. If you want to get tariffs down, let's deal with other negotiating tactics. But meanwhile, they hurt us, and keeping them low helps us. If you're worried about, oh, it's cheaper to make it over there, how about you make it cheaper to make it here? What does that mean? You cut taxes. We already did that from 35 to 21% for businesses. What happened? A lot of money came back. A lot of pay got raised. A lot of people are getting hired. It looks like we're going to have better than 4% growth this quarter. Back when 2% growth was, quote, the new normal under Obama, it wasn't new normal under anything. It was strangled economy. Now, if I lower the cost, I reduce the cost of a product, make it cheaper. How do I do that? Okay, I cut taxes. I don't only cut it on companies. I cut it on people. I reduce taxes on people. So income tax needs to go down some more. But there's another tax on people. It's called regulations. And this is another place Donald Trump is doing very, very well. By slashing regulations, he's making it easier for companies to do business. It was, in many cases, so difficult to meet all of the needs of the regulations that a lot of companies just never started. They looked at it and said, it's too hard. We can't do it. It's too expensive. When it's all done, we can't make any money. But if you cut the regulations back to the bare minimum, and that's still a whole lot less than we've got right now, then you cut the costs. When the cost of hiring an employee here goes down, the number of things made here will go up. We're already seeing some of it. It's going to get more and more. So let's not forget that. Finally, there's one other thing. Yesterday, President Trump announced, well, we're going to figure out how to give $12 billion to farmers so that they won't be hurt by the subsidies that are, or I should say the tariffs that are preventing them from getting their stuff sold overseas. Guess what? Every time you give them a subsidy, you pay for it out of everybody else's paycheck. You raise the cost on the rest of us. A subsidy to farmers hurts the rest of us. It's just that the squeaky wheel gets the grease. And there are only this many farmers compared to that many of us. And what hurts the farmers this much hurts us that much. So, bottom line is, they yell, they get the results. But subsidies, remember the law of subsidy. Every time you subsidize something, you get more of it and it gets more expensive. You're making farm goods more expensive directly. This is a bad, bad idea. What should the president do? Very simply, continue cutting regulations. He's really been good at it. There are a lot more to cut. The problem is that the rules on cutting them mean that they happen slowly. Second, we need to cut taxes more. Tax cut 2.0 needs to be bold and big. And then we need to forget the tariffs. unless they're purely a negotiating tool. And it looks like with regard to Europe, that may be the case, because the European Union just came out of a meeting with President Trump saying, hey, look, we're going to see about cutting our tariffs to zero on both sides. If that's all they were, maybe they're okay for a really, really short run. But anything after that is a bad news thing. Keep cutting taxes, keep cutting everything else. Get the government out of the way. The economy will boom like never before. We will make America wealthy again by doing this. And what's wrong with getting rich? Until next time, please like VidZ on Facebook, follow at VidZ on Twitter, and support at VidZ on Patreon. I'm Dr. Ted Noel. Thanks for watching.